Hi, welcome to Market in a Minute. We've had a huge shift in the sentiment regarding the fundamentals. We shorted oil, so we teased about that last week and we did it. We pulled the trigger on that. Big updates on Anavex and Viking Therapeutics. Stay to the end to see this. These are really interesting. What's going on with these two companies? Disclosures, please read that. Market update. So we've moved from, having the expectations of the lower taxes really helping the economy, big incentives because of capital spending, moderate inflation, lower interest rates, an economy that's broadening out so it's more sustainable. So basically nirvana, right? Now we move to the sentiments turn very negative, higher inflation, higher interest rates, and the economy that's potentially on the brink. So don't even think about looking out to 2027 because the economists think we're going into recession. So this has created a buying opportunity. And this is what we were looking for. A temporary shift in sentiment. Didn't expect we'd have a war like this. Actually, we thought we were going to go to war with Iran much early in Trump's presidency. But here it is. Oil prices went up. And the big concern is that they're going to go a lot higher. We think this is a temporary problem and will be fixed in the coming weeks. So oil prices are going to come back down. So is this a temporary concern? We think so. So the S&P 500's fallen roughly 7.6% from the high to the low. NASDAQ up down over 9. The Russell 2000, so small caps, down almost 12. So this is a nice pullback. So maybe we don't need that 20% correction as a lot of the speculation has been wrung out of the markets. So the areas like in technology, some of the tech stocks have just been beat up brutally. So maybe this concerns in the markets at this point. When we look at Iran, we think, okay, this was a -3 to -5% hit to the overall markets. We got 7.6. So there's something else that's bothered the markets. So in our opinion, it was the PPI report, the Producer Price Index report last week, and then the Federal Reserve meeting. Okay, talk about odd. The Federal Reserve is talking about raising rates in a supply crunch, supply shock on oil. Why are they doing that? It makes no sense. You raise rates when it's a demand pull, not a supply shock. So if they raise rates in this type of environment, it's going to really hurt the economy in a big way. So if they raise rates in this type of environment, it's really going to hurt the economy. So you don't raise rates again in a supply shock. It just has the impact of really bringing down the economic numbers. So also what's happened is the Federal Reserve, Powell, he's decided he wants to stay. As long as we have this pending issue, legal issue with him, he wants to stick around. There's a real easy fix to this. Trump and he ought to get together and go to the contractor and call BS on the expenses, renegotiate the price, threaten that guy rather than Powell. That's the solution. Let's get Powell out of there. Powell is not a forward thinker. We're so much better having him gone out of the Fed completely. Okay, just want to emphasize a point. No competent Fed will raise rates in a supply shock. Key factors is to be able for the markets is the ability to look out to 2027 with confidence. We had that before, okay? Now the sentiment's completely changed. Now we no longer have it, and it's all centered around oil prices. So when oil prices come back down, that sentiment's going to shift all the way back to the positive side. Inflation's been the problem, right? So higher oil prices, hurts inflation. There's two main components to the inflation. One is energy prices, i.e. oil, and the other is owner's equivalent rent. So owner's equivalent rent, So this is how much it would cost you to rent your house, right? So this has gone from this has gone from 5.9% 2025 to 3.1% over the last 12 months. So you can see here, big increase in 2025. Okay, it's starting to moderate. This is where they didn't have any data, but it's starting to moderate. It's now running at 3.1%. We think that this ultimately rolls over to be flat or maybe even turns negative. So inflation, in our opinion, is only driven by the oil prices right now. It's a shock and it's going to be reversed. Now looking at the multiples of the S&P 500, we've gone from 23 times, right? Now we're down to about 20. We need those earnings to come through. So we see that maybe there's downside risk, like in other periods here recently, to maybe 18 times. That's 10%. But we kind of doubt that occurs at this point in time, given the internals of what's happening in the stock market and how big of a massive move some of these stocks on the downside have had. The technicals, okay? So why do we short oil? Well, we think oil prices are way above what it costs to get them out, on the ground. You know, some areas like Saudi Arabia, maybe it costs at most $8 to get it out of the ground. Some of the areas in the U.S., maybe it's $30 or less to get it out of the ground, and the marginal guys are maybe at $50 to get it out of the ground to the markets. So here is a chart of oil, pretty consistent. Okay, obviously we anticipated the Iran war, the markets did. Here's the Iran war hit. Markets, the price of oil went up in a big way. It's 60% above the 200-day moving average. Okay, that tells you a lot. It tells you, okay, here is where the supply demand is in balance. Here is where it's out of balance. It's going back to being in balance here probably shortly. So how to play this? So you can short a long position, like you can short USO, or you can go to the futures markets. I don't like doing that because you have unlimited risk. Okay, say oil goes to $250 a barrel, which is not. You're going to lose everything you put in, right? You're going to lose a lot of money by shorting a inverse ETF. Whatever you put into it is the maximum amount you can lose. Actually, it's less than that. So we use the 2x on the which is the SCO, which is the double inverse on the oils. So if oil drops, say it drops from 100 to 50, we would expect that ETF to gain roughly 100%. And we don't see a lot of risk to the upside. Maybe we're wrong there. You got to watch it closely. And then just keep in mind also the SCO has some tracking issues. It doesn't track one for one every day, but there's some tracking issues. It's pretty close most of the time. Just keep that in mind when you're buying it. Not to be surprised if for whatever reason oil's down 10% and this is not up 20%. So how it should work, if oil drops 10%, this goes up 20%. And likely it'll do that over time or get close to it unless there's a lot of volatility around it. So if you want to do this, go to the PVG website and look for the white paper on levered ETFs. That'll help a lot. So the S&P 500 is breaking down technically. So it's broken through this small range we had in a big way down to another support level, which we think is good support. So around 65.40 on the S&P is a good support level. It broke through that briefly on Friday, came back above it. Now it's still below the 200-day. 200-day is around 66.20-ish in that area. We would like to see it break through that to really have a nice buy signal for the S&P 500. So think of this as you're a surfer and you're going out to surf. he hit some waves. So we have some waves here to break through. So we got the 200-day, the 100-day, the 50-day, and the 20-day. We can break through all this very quickly if the price of oil comes down. So what we saw on Friday was brutal. We had a triple witching day, and that caused a lot of volatility to the downside, made it back up on Monday. Price of oil has come down, so we'll see if there's any follow through here. But this is setting up as a nice buy signal. It's got to maintain where we are. It's got to, it can't break down any more than what it is, where it is currently on the S&P. Want to see it back above that 66.25 on the 200-day, and I think it clicks into a nice buy signal, and all that sentiment, because oil prices coming out, it's going to shift back to the positive. So I wouldn't want to be, naked short the markets right now. Hedging okay, but not naked short the markets. So we've been very conservative. We bought a few stocks, and we are looking for a rally in the overall markets as long as we can hold this level. Individual stock updates. Anavex, AVXL. We've liked this one because of the huge upside potential if they get their Alzheimer's drug approved. And we all know they went to Europe, the EMA, the European Commission, the CHMP. That's what their commission stands for. It's like the FDA. They turned it down, and the company has refiled for approval again. It's refiled with the memory scores they got from their drug, which were really positive, and then the biomarker data, where it shows a dramatic slowing in the shrinking of the brain. That should be all they need to get approval. And so what has happened is the Alzheimer's of Europe put out a press release on Monday. This is really interesting. They are endorsing the approval of this drug. So if I was on this commission and I said, hey, this group represents these Alzheimer's patients in Europe, they really want it approved. Here's what their message is, that the medicine fulfills a huge unmet medical need. The benefits outweigh the risk, very little side effects to the drug. The company would be required on a conditional approval to continue with another study and then report those facts back to the commission. So we think it's got a reasonable shot of getting approved. What odds you put on it, I'm not sure, but maybe at least 50-50, okay? The stock is so undervalued with a 50-50 shot. This company ought to be close to $1 billion in valuation. There's more, okay? So the same drug works for Parkinson's. They are going into phase 2B3. So this is a registration trial in the fall. They'll start this trial up. This is a big market. Nothing really works for Parkinson's. It slows it a little bit, but this is a big market. So there's a lot of benefits from this drug that no other drug out there has at this point. So if you put on an additional indication, there's a lot of upside to this company as it is currently. So we like this one. Hopefully we get a nice move out of this on this news, or this press release. Actually, stock was up 9% on Monday, but we think there's more to follow. So as the market starts to hear about this, the sell side starts to hear about it. We're probably way ahead of the sell side at this point. When the analysts start to look at this, I think they'll get much more positive towards it. The shorts ought to be spooked in a big way. You got two indications for this drug now, and you have a nice potential approval coming out of Europe. Viking Therapeutics. So we've liked this company for a while, right? This is our play on the obesity space. We were originally in it at roughly $2.45 when it was a play on fatty liver disease. And they switched it to, they went through, phase 2, phase 3 ready. and they decided to shift gears to the obesity market, which had more upside. They're getting inquiries. Okay, we did a call with them last week. The company says they've got interest in from other companies to acquire the drug, and we think that this drug's worth a lot. The competitor, which has a similar drug, Magriel, MDGL, has a drug that's been approved. It's not nearly as good as Viking's drug. Okay, this company has about a $10 billion market cap. We think that this drug could be sold, and maybe we get a 100% move in the stock off of that. Now, that doesn't include all the interesting news that's going to come later this year from their phase 3 trials and starting the phase 3 oral trial. But there's a lot of good news coming from the obesity side. We were waiting forever for them to monetize this drug. We think this stock could go, into the 60s on this swerve announcement. So just to reiterate where we are, we think we're at an important point in the markets. We think that likely the issue with Iran is going to dissipate. We have no expertise in this area, but we just kind of watching what's happening, and there's not a lot of room for the Iranians to maneuver. They need to save themselves, and we think that what's going on will be over within a week or two from now, and you'll see oil prices vastly lower, which will cause a big shift back the other direction in the sentiment of our markets. And now we've got some room on the upside for the PE multiple to go back maybe to where it was. But at least for these companies, as they deliver, stocks in the markets deliver earnings, that the markets can go nicely higher. And as usual, we always have a contingency plan. If we're wrong about it, we just get out of the way. We protect ourselves. So if you have any questions, just ping us on the video. Come to my website, Patrick Adams CFA. Sign up for a hard copy of Market in a Minute. We'll send that to you every week. And then also come over to the PVG site and see what we're doing there, some of our strategies. They've been really, really good strategies over a long period of time. Take care.